We have Ramesh Mantri, who is with us, Director of Investments at Oak Capital. He's coming on for the first time on this slot. Ramesh, it's good to see you. Good morning, Prashant this side. Thanks for joining us here on CNBC-TV18. Ramesh, so how are you and your team thinking about this? You know, clearly, we are in a bit of a wait-and-watch mode. It's a big event. It'll come and go, but nevertheless, you've got to sort of cross that, right? Which is the election result. How are you guys thinking about this one? Going into it and out of it. Let's start there.
See, first of all, we are no election specialist or political specialist to have a very strong view on what happens. We are just going with the broader consensus view that, you know, whatever the general market belief is what is going to play out. And hence, we are fully invested as we go into the election results. So our view is don't change anything, wait for the election results, and then take a fresh view of the situation.
Ramesh, is the market itself looking pretty all right? I mean, this entire election thing hanging in the near future. I mean, otherwise things are looking good. I mean, actually, global markets have been pretty good. There is the promise of a rate cut, easing cycle, which will begin at some point. So it's a pretty constructive environment overall, isn't it?
Yes, so I would say it's a mixed picture. You know, things are improving, markets are rallying. At the same time, you continue to see sometimes surprises on inflation, sometimes on geopolitics, right? So, you know, I think the India picture is a lot more sorted than globally. I think India, the earnings season has been slightly weak this time, but this is more because government spending has been weak going into the elections. And hopefully post the 4th June, that spending pipeline will open up. So otherwise, the domestic picture is a lot more, you know, clearer than the global picture.
Okay, domestic picture is a lot more clearer than the global picture. For now, at least, you know, you have the mid-cap end of trade, which is looking very good. So broader market traction is picking up. Ramesh, hi, good morning. Good to see you in. Tell us about your new Special Opportunities Fund. You know, what does it entail? What are you guys looking at?
Yeah, so the whole idea of the Special Opportunities product is to, you know, take a, you know, look at all the special situations that emerge in the Indian market, and also to take a slightly contra view to our general style of investing. So this is going to be more opportunistic because you are going to be contrarian in many of the positions. It's going to be more value-oriented than our typical style is. So this is going to be a product with slightly higher volatility, but hopefully will perform differently from our other products, and hopefully will deliver better returns over the long term.
Interesting one, Ramesh. Good morning and good to see you on the show. Nigel on this side. You want to give us a sneak peek? What all could feature in that list? You know, you have a couple of banking names that have underperformed. You have some FMCG names that have underperformed. I don't know. There's a long list out there. And there are big outperformers as well. But since it's a contra fund, you want to give us some kind of a sneak peek?
Yeah. So interestingly, this fund is getting invested on 4th June after the election results are out. So we have, you know, the allotment date is actually 4th June. So it's been properly timed because the election is a special situation in India every 5 years, right? So that's the context. So because it's a special situation fund, I wouldn't talk about any positions as of now because first we have to wait for 4th of June because that itself will determine the path in many ways for special situations in India.
Okay. All right. Ramesh, since we're talking about the elections, you think the markets will be okay, 272 plus, that's done? Or maybe the expectations were elevated, 400, 350 odd. If it's closer to 300, is it par for the course, or do you think the markets will be disappointed, which gives you a good entry opportunity actually?
See, honestly, after you get a clean majority, incremental seats don't add up much. You know, even, you know, this is all, you know, talk and all, but once you have a majority government, it doesn't matter whether you're 270, 300 or 330. It doesn't matter unless you get to a 400 number, which means you have ability to change laws, change constitution, which is a different set of powers. So I don't think the discussion between 270 or 330 matters a lot. And even matter, in fact, between even 250 to 330, it doesn't matter, you know, because the government will be formed.
Okay. In terms of sectors, right, where do your preferences lie now? You said that the domestic picture is a lot more clearer than the global picture. So I'm guessing you're looking at domestic facing, infrastructure, manufacturing, etc. But just take us through where do the big opportunities lie, both in terms of growth as well as in terms of valuations.
So these are very different answers, actually. Only a few pockets are there where you actually have very interesting mix of growth and valuation. I would say the banking and the BFSI space has been beaten down. It's been actually the only large sector I can think of which is trading below long-term valuations and where fundamentals are still very good. Growth is good. So that's the only basket where valuations and fundamentals are very strongly aligned. And you can't have economy growing rapidly without the large financial sector participating because somebody needs to fund the growth, right? And of course, intermediate savings to the entrepreneurs. Coming to growth, I think there are some very strong growth pockets in India starting with, let's say, the manufacturing story, electronics manufacturing. I think there's just a story today that the Google Pixel phone is going to get manufactured by an Indian EMS company. You have power Capex cycle is going to be massive, particularly on the renewable side. Infra story continues. And then, of course, there are going to be pockets, sub-segments within markets which are doing well. By the way, capital market businesses are doing exceedingly well as we speak. So the growth is, and I'm sorry, I forgot to call out real estate. I think real estate remains, the underlying fundamentals remain very strong and continue to remain very strong. It has come after many years, the cycle has come back. So overall, the economic momentum is broad-based. The only space where we have seen weakness, one is FMCG, where now people are expecting some green shoots. And consumer discretionary, the urban consumer discretionary is still quite weak. Apparel, shoes, a lot of sectors in that. Our retailing is quite weak as we speak. But otherwise, the spaces where government has a lot of focus, which is, manufacturing, EMS, defense, those are doing well. And most companies in that sector have surprised markets. And the stocks are done exceedingly.
Ramesh, but if you are already in and you're enjoying the ride, that's great. But valuation is a problem. I mean, for these names, the EMS space.
Yes, so clearly, the ask rate is clearly going up. So you're very measured. I think now, it's going to be a lot more bottoms. So even by the way, within the EMS space, we have seen a couple of companies execute very well and a couple of companies have disappointed significantly in electronics manufacturing services, right? So it's again a bottoms-up story rather than a top-down story. I think valuations generally in India, wherever there's very high growth, are always high. India has always been a growth market, and the market is clearly bid up. Valuations in small cap are at uncomfortable levels very clearly at a broad-based level. Within that, there are opportunities. I think the real value bucket in the market is actually more today on the large cap side rather than on the small cap side.
Okay, so just one more question before we let you go. Since you were talking about, a couple of sectors, right? I wanted your thoughts particularly on autos, because we're seeing now a revival, not just in the sector, but in the ancillary space as well, especially the guys who have a big exposure to the electric vehicle space, given EV adoption. But the only problem here is that growth rates are not picking up as fast as one would have expected. I mean, the management of JK Tyres was just telling us that the entire tyre industry will barely grow 6 to 8% in FY25. Would that deter you a little bit, or do you think that this is a good space to get into?
So auto demand is coming up. You see, over the last 5-7 years, the cost of auto ownership had gone up a lot because of, higher road taxes, insurance costs had gone up significantly, particularly the cost for two-wheelers had gone up significantly. And surprisingly, in India, the entry-level car market is not doing well, and SUV segment is doing very well. So there's a dichotomy in the premium segments across categories are doing well versus the mass segments. So auto demand is clearly seeing a revival, and we are started seeing benefits in ancillary also. And a number of companies are actually the export stories also. Remember, auto components is the original export story, manufacturing story, right? Apart from pharma. if you go back to the previous decade or so, apart from pharma, auto ancillary, auto components of the companies that started exporting. It's a large market to go. Coming to EVs, I think the adoption is slower than we think we anticipate it to be. And in fact, people now believe that EV adoption will take much longer than we had anticipated. And we might not end up, it is not so clear cut that the end game in every auto market is a EV. You might end up having multiple fuel models, coexist. And people are talking about, even vehicles based on hydrogen. In India, hybrids are a good intermediate solution, because you get a lot of benefit on fuel efficiency. And remember, transporting, the charging infrastructure is a very necessary condition for EV adoption. And that rollout is still very slow on charging. And then, by the way, that is a public good. And, it is an infrastructure that has to be provided by the authorities on charging infrastructure.
All right. Ramesh, we'll leave it there. Thank you very much for your time, and we wish you all the best with that fund. And once you kind of have those investments in, maybe we can talk about a few names. But that, as you said, is only going to happen post-elections, post the numbers come in. That's the timeline for that one.